Well, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, and Jordan, we're going to talk a lot about the metals, especially because of what happened in, well, all the metals and a lot of the metal stocks. And I know some of the comments we've gotten recently is that our daily editorials have been fairly negative, but in all fairness, one thing that you did for your subscribers and in your own trading portfolio was, I believe at the tail end of last week, you put a short on the gold miners. I believe you were in Dust and another short vehicle, and that ended up paying off really well for you, especially because of that big drop. Quickly take us through and review that trade that you and your subscribers were in.
Well, thanks for having me, Corey. On Friday, we actually increased the position. And days before that, I was saying, I really want to see a rally so I can increase the position. We're kind of at the point where it could be a momentum trade. And so initially, we took an initial position in J-Dust, I want to say like over a month ago, and then an initial position in Dust a couple weeks ago. And then on Friday, we increase those positions. I was just worried that while we were seeing miners trend down, it wasn't until this week where you really saw a waterfall type decline. You saw capitulation. I was worried on Friday, if I wait until Monday, maybe on Monday, there's the risk we might get a gap down and like a 3 or a 4% decline. So that's why I increased the position on Friday. And then over the weekend, the game plan was we're going to hold these until we get to the December 2016 lows, which is exactly where we got today in GDX and GDXJ. So I put out an alert this morning saying sell everything. So, it doesn't always work as well as it did, but, hopefully many subscribers were able to take advantage of that. And now it looks like we're probably going to get some kind of a rally in the miners because they tested those December 2016 lows. And we're speaking about GDX and GDXJ, and I believe they came down very close to the exact lows today. So the short-term outlook for the miners, I would not be surprised. Well, I shouldn't say that. I'm expecting a rebound to start in hours. If it hasn't already started now, I would guess tomorrow, Thursday, maybe we might see a little more selling Thursday morning, but that could set up a bullish hammer, like a bullish reversal. And I also mentioned the Huey Gold Bugs Index. That came down to 144, perhaps a little bit lower. Today it's at 144 right now. But there's a descending triangle pattern, which projected down to 146 to 149. I also mentioned there's strong support at 140. So maybe we get a tiny bit more selling in the Huey. But again, I think we're setting up for a bullish reversal today or tomorrow. Big picture, Corey, the breakdowns we had in GDX and GDXJ, they're still projecting down to 16 for GDX and 24 for GDXJ. So this is not a major bottom that we're going to see here, in my opinion. I think it's just an interim bottom where we could see the miners rally for a couple weeks. But there's still, I think, a lot more selling pressure that we're going to see over the coming months. But very short term, have to be bullish here.
So is this then what you think an attractive trade, even though you do have lower targets, even though this breakdown was pretty significant in terms of technical levels that were broken, but after these waterfall declines, usually you do get some sort of a rally. Is this a tradable rally in your eyes?
Yeah, it is a tradable rally in the miners. I think we could see a decent bounce, but I don't know how big of a bounce we're going to get because looking at GDX, it's trading at 1873 right now. Can it rally 10%? That would put it at about 2050, if my math is correct. That's a decent target. I from this point, I don't see it rallying much more than that. So there's times from 2013 to 2015 where we saw some pretty big snapback rallies in GDX and GDXJ. I don't think we're going to see more than a 10% rally. Maybe it will only be 7 or 8%, just because, Corey, even until a couple of days ago, Corey, GDX and GDXJ had just broken down from big consolidation patterns. GDX, if you look over the last 18 months, you've seen all this trading between 25 and 21, and you can draw a line there. And that's broken down, and that trading happened over 18 months. So there's a lot of buyers there who are underwater, who are going to have to sell at some point. So it's just we're a little bit too early in the breakdown. I would expect after the next leg lower, when we get GDX going down to 16, that's when you could set up a bigger rally than the one that we're going to see right now. So unfortunately, while I'm short term very bullish here, and there is a chance for a very quick trade, I don't think this is going to be the kind of rally that lasts more than a couple weeks.
Okay, let's talk about gold too, because gold really just sliced through that 1200 level. We both thought that there was a good chance that it might at least stop there and provide the rally from there. That's not the case. As we're recording this, gold is trading around 1176. What are some of the targets that you have for how low gold can actually go?
Well, if we look at the monthly chart, there is strong support around 1140, 1150. And gosh, I'm really surprised at how gold, not only first how it went to 1200, because I never thought it was going to go that low. Speaking from a couple months ago, I never thought gold was going to go that low in the first place. And then over the last couple of weeks, it was holding above 1200 to 1210. I figured, yes, this is where the rally's going to start. So I'm surprised that gold has fallen apart here the last couple of days, but there is some support at 1180. So, you have two scenarios here, Corey. One is gold is like the miners, gold is going to put in an immediate low here over the next day or two around 1180, I would say. The second scenario is we see a little bit more selling down to that 1140, 1150 area, and then you get a big bounce from there. As far as what my targets for the bounce would be, when we were holding above 1200, I was looking at 1260 as the upside target. Now there's resistance at 1235 around that area. So that's looking at the chart now. 1240 is the December 2017 low. It's also the end of June, early July low. And then at the very end of July, that's where the recent peak was, right around 1235, give or take a couple bucks. So 1240 is going to be the resistance. So again, gold's either going to bottom around 1180, or we might get one more quick decline down to 1140 or 1150. And my upside target would be, call it 1235, because 1240 is going to be pretty stiff resistance. And finally, the COT it's probably going to look really good on Friday. The net speculative position. A lot of people have put out what's going on in the managed money category, Corey, but that's only one part of the speculator category. I like to look at the entire category. And at the end of 2015, we got that low. We were basically almost at zero. There was like 1,000 long contracts. And I think this past Friday, the long contracts were, I want to say like 25,000. And that was about 5.6%. So this next reading, we're probably going to get as close to zero. A lot of people are going to say, look, this happened in December 2015. So we're going to have the same type of rally. I don't really agree with that. That's another conversation. So I'm just telling you ahead of time, the COT is going to look really good on Friday, but there's many other factors at play here. But yes, in the next day or two, we should see a rally begin in the sector.
Well, and remember, those COT reports are not always the best timing indicators, but they do show extremes that you can get to, and hey, it can even take longer than we would like to think for those markets to turn. Let's also talk about that US dollar, because that has definitely been a headwind for the metals. Broke above that about 96 area resistance, continues to move higher, a lot due to concerns out of EU and their banking system. Turkey is kind of the contagion effect that is pulling those banks down, plus just the fact that the U.S. economy looks stronger than really any other economy out there. This dollar, I'm hearing more and more bullish arguments that I thought should have been even in play last year as the dollar was moving down so aggressively. Where do you stand on where the dollar could go from here?
Well, Corey, there's a lot to cover with the dollar, and I'm not the biggest expert on what exactly is going on here, but I can talk about the charts and maybe some how the dollar is impacting other markets. So the dollar, you have a beautiful reverse head and shoulders pattern. The dollar broke above it last week. You have an immediate upside target of 98, but you also have an ultimate measured upside target of 101. That's from the reverse head and shoulders pattern. The dollar's trading at 96.61 as we speak. And we've talked about in the last couple of months, Corey, how the 95 to 96 level, looking at some real long-term moving average resistance, all of those moving averages come into play like in the mid 95. So there's very important resistance at that level. And so the fact that the dollar has moved above it and appears to be holding above it in recent days, I mean, we'll see what happens over the next couple of weeks, but the fact that it's gone above it and is holding above it, that's very bullish for the dollar. Again, these patterns have upside targets of 98 to 101. And the bigger picture, Corey, is obviously there might be some contagion with Turkey affecting the EU, and we'll have to watch that. If you look at the dollar and euro chart, just specifically the dollar euro, that chart, well, it depends which way you look at it, but I think if you're looking at the euro in front, so the euro dollar, that's made a massive head and shoulders top, and it's broken down from that. So it really looks like the euro has potential to go a lot lower technically, and obviously that's going to benefit the dollar. I mean, the dollar chart looks good, as we just talked about. But the issue here, Corey, is how is this impacting other markets as far as capital flows? And what we could be seeing is money goes into the dollar, and then it also goes into U.S. assets. So first and foremost, that means the bond market. We're seeing long-term interest rates have failed to break out. They could be rolling over. And it's also going into the U.S. stock market. I mean, other markets are selling off pretty aggressively, but the U.S. market is still holding up around its highs. So that's something to potentially look for, Corey. As the dollar keeps going higher, long-term interest rates are probably going to go lower because money is going to move from the outside of the U.S. into the U.S., going into U.S. bonds, pushing long-term rates lower, and also to a lesser degree going into the stock market, but the stock market could still benefit. Now, ultimately, Corey, in the big picture, eventually we could see the yield curve get inverted, and while these capital flows and what's going on overseas could end up hurting Europe, at the last point, it's probably going to affect our economy. And at some point, the dollar could be too strong. At some point, the Fed will stop hiking. Then they'll move to a cut. And so that could be, that could be the point when we want to buy precious metals. Well, I shouldn't say that could be. That is the point. When the Fed stops hiking, that's when we want to buy precious metals. I know we'll probably talk about this next week, but I'll quickly mention I've looked at at 12 rate cut cycles, every rate cut cycle over the last 60 years. 10 out of those 12 cycles, gold stocks gained at least 52% with an average upside of 185%. So, look, there's a lot of pain in precious metals right now. It's probably going to get worse in the months ahead, but eventually, Corey, we're moving towards, at some point next year, a historic lifetime buying opportunity in precious metals.
All right, that's something to look forward to, Jordan, and I know time and time again over the last few weeks and even months now, we have been a bit negative on the precious metals, but it's turned out to be rightfully so. Needed to be defensive that time for the move down that we have experienced, but let's see if some things change in the market to turn some of these lower levels and selling pressure into a bit more of a buying opportunity. But short term, after that waterfall decline, there definitely is a good opportunity for a bit of a rebound right now. Jordan, great chatting with you. I'll have you back on next week, and as you mentioned, we are going to be talking about these rate cut cycles and what it usually means for the metals. Have a great rest of your week, Jordan.